This series of videos are going to discuss break-even points and then leverage analysis. We're going to analyze a company called Spuds and Suds. They have an income statement for the year ended December 31st, 2020. So in cell B4, I'll put 2020. We start with sales. This is going to be a different kind of income statement where costs are grouped as variable or fixed. Earnings before income and taxes, less the interest expense, earnings before taxes, net income. Skip a line, we're going to have preferred dividends in this example. So we'll have net income available to common shares outstanding, and earnings per share. So now didn't mean to skip that line. In cell A19, we're going to have the following assumptions. So we'll then pull data back up the top. So we'll have a price per unit, unit sales, variable cost as a percent of sales, and then a tax rate. So our assumptions are $16 per unit, 156,250 unit sales, 60% variable cost, tax rate of 25%. Okay, so now going back up the top, our sales then are equal to the price per unit times the number of units. So you should get 2.5 million, less variable cost. So that'll be our sales multiplied by the 60%. So 1.5 million. We'll have fixed costs of 400,000. So earnings before interest and taxes will be equal to sales minus the total cost. In this example, we're going to say we have interest expense of 100,000. So we'll take that difference. So then our tax amount will be equal to the earnings multiplied by the tax rate. And then take that difference to get net income of 375,000. We're going to have 100,000 in preferred dividends. So the net available to common is 375,000 minus 100,000. If we assume 1 million common shares outstanding, then our earnings per share will be 0.275 or 28 cents. Okay. All right. So now we can use this information to calculate the break-even point. So in A25, we're going to call this operating break-even point in units. And then we'll drag this down, and then the only difference will be the units will then be dollars. So in cell B25, to calculate the break-even, which means that you have zero profit, that's going to be equal to B7, the fixed cost, divided by, parentheses, the price per unit, minus B6, divided by B21. So what we're getting is the variable cost per unit because we divide first, then subtract, and then we divide it by the fixed cost. So you should get 62,500 as your break-even amount of units. To get how much that is in dollars, that's going to be equal to the 62,500 we just calculated, multiplied by B20, the price per unit. So you could say you need to sell $1 million worth of units in order to break even. Okay. There's some other break-even points. So what we're going to do is in we're going to add a row. So A22 is now going to be something called target EBIT. So maybe instead of breaking even, you want to hit a certain sales goal. And that'll be 800,000. So then the units to meet the EBIT target will be the following formula, which will be equal to what we just did, but now adding in that amount. So B7 plus B22 divided by parentheses the price minus the variable cost, but that needs to be per unit. And you'll get 187,500 units that you'll need to hit that target. If you wanted to also do dollars to meet the EBIT target, that'll be what we just calculated, 187,500 multiplied by the price per unit to get 3 million. Another thing that you can calculate is something called the cash break-even point. So that's going to be where your earnings per share are equal to 0. So for this one, you can call this the cash break-even point or total break-even point in units. So this will be equal to B7 plus B9, the interest expense, plus B14, the preferred stock amount, divided by 1 less the tax rate because it's not tax deductible. And then all this divided by B20 minus, again, B6 over B21. And that'll get you 98,958.33 units. This is going to be the number of units that you'll need to break even to 0. And then if I want the total break-even point dollars, so how much money I'll need to make, that'll be that break-even amount multiplied by the price. So you can see how much you would need to make in order to have an earnings per share of 0.